Welcome to Tradiers, the Traders. By the way, Bobby, I did radio all last week. And remember when we were kids, everybody on the radio had a radio voice like, welcome to Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. I'm thinking of bringing it back. What do you think?
I like it. I've been told I have a voice for radio and a face for radio, and that's an old joke, but I have actually been told that by old people.
No, you have a good voice, and my voice is kind of all over the board, bouncy and high pitched. So I think I'm going with the much more deeper 60s radio.
I was watching some Seinfeld reruns the other day, and I was reminded of you. This girl, the girl Jerry was dating, told her, she's like, I've never seen you angry. He's like, I get peeved, I get miffed. And then he was asking his friends, he goes, you see me angry, right? He goes, no, your voice just kind of raises to a comedic pitch. That's what your voice does all the time. I was like,
that's when I get riled up, right?
It gets riled up and it just goes way up here.
That is very true. Anyway, we have one of our favorite guests and the author of Unfiltered Investor Newsletter, which is amazing. If you guys haven't tried it, you haven't been there. To be fair on it, Bobby and I both contribute on it as well. But Mike Arnold's technical analysis literally has saved me and made me tons of money. Let's bring in Mike Arnold, Chief Strategist of Path Trading Partners. You know what I'll say about your strategy, Michael? And this is what it took me a while to get into the rhythm of it, because other technical analysts would be like, they'll put it out and they like talk so assuredly, like, this is where you buy it and this is the target thing. You give a scenario that it takes a few months to understand exactly what you're talking about. And then it makes way more sense than those other guys, just because none of it, this is a roadmap, like an old roadmap that you're not even positive things are going to work out the same way they did. It's just about probabilities. And I really, really appreciate that. Thank you. It's not a question.
You're welcome. Thank you for those. Thanks for those words. And it is, I mean, the markets unfold every day, and to not look at something and say, hey, you take the new information and levels might change. I mean, we have a roadmap, we have key targets, we have pullback levels, but then to say it's an absolute buy at this price and foregoing all new information on a regular basis, I haven't found that works very well, because then you're just stuck to a pre-planned path. And it's like if you're on a road trip and they have an interstate closed down or something, what are you just going to sit there and wait for
you get a new path?
You're going to find a new path.
Yeah. And the funniest part, you know what I love, is when people who are kind of the haters with me and Bobby and you, when we're wrong on something, and we've been spectacularly wrong on things, be like, haha, you suck, you're wrong. We're wrong all the time, dude. You know what I mean? Like, we're trying to be right about the same amount of times as we're wrong and make more money than money we lose, and then head to the bar by 5. Bobby, you got anything to add to that?
Yeah, if I counted them up, including positions that are still open and profitable, and including positions that are still open and not profitable, I think we're somewhere, I should say you, Mike, it is your newsletter that Jimmy and I co-write. It's, I think you're somewhere around 15 and 5 in terms of winners and losers.
15 and 5? Jesus
Which is
Christ.
outrageous. It's outrageous.
Yeah,
now, granted, the market's been going up. Okay, let's call it.
Yeah, everybody's a genius.
It's one of those things, everybody's a genius. Like the monkey's probably 16 and 4, right? Throwing the darts. But I'm just saying, like, there's a way, and Mike's the best at it, in my view. There's a way to put the odds in your favor with patience.
This is
and you'll be looking at something. There's been times Mike and I have been looking at trades to put in the newsletter, and I've said, we should put this one in. And Mike's like, it's way better down here. And then it goes up anyway. But I can't disagree. It would have been way better down there. Yeah. And that the cost per risk is better Mike's way.
Yep.
So that's why we defer to him. That's why he vetoes things.
No doubt about it. He has veto power on the technical stuff. Let's look
Mike, can you do me a favor? Can you move around? Because something about your blurred background makes it look like you're in one of those Christopher Reeves chairs. That's better. You can go back to where you were. I just want people to
go.
Actually move.
There we go.
Well, Christopher Reeves chairs, you mean a wheelchair?
The chair that holds your head too.
Oh, yeah, right.
I don't know.
That poor guy. Yeah.
I don't mean to be insensitive.
Oh, no, hell no. Poor guy. That was a terrible thing. Yeah. Anyway, let's not talk about quadriplegics anymore. Let's talk about the S&P 500.
Yeah, and let's talk about that. By the way, again, the adage, don't mix up a bull market for brains.
Right.
And when everything's going up like it's been grinding now higher, what are we on now? And I'm still watching for pullback setups because the reward to risk is not great up here to establish brand new positions from the way I do things. My historical average from many, many years, because I track a lot of data, is 74% average winners. So
yeah, it's pretty damn good.
Yeah. So is that 100%? No, you're not going to hit that. You know, it's funny because even if when you get 2 or 3 or 4 in a row, yeah, it's not fun, but it's within the complete realm of probabilities. And people who shoot, I need 95% winners, I need 100% winners, is not
You're an
gonna,
idiot.
unless you're I remember this one guy. Then we'll get back to S&P. He's like, I got 98% winners in my option strategy. I asked him what he was doing, and he built up a pretty large account. And he's like, yeah, it's a no-brainer. And this was in 2000.
I can guess exactly what he was doing, selling way out of the monies.
Selling all the money puts. And not even at high vol prices. He was just selling them. And he's like, yeah, this cause, and even if it pulls back, I just cover it. Well, he blew out in 2008.
Just amazing. Of course.
I didn't mean blow. I mean, he lost his, and this was a close to 7-figure account. He lost the account plus more.
Yeah.
Okay. Because when you get one of those events, so yeah, he could claim he had 98% winners, but that 2%, percent did him in.
We always talk about is picking up nickels in front of the steamroller.
Yep. Chasing a penny the wrong way down the highway. You don't want to do it.
You don't want to do it. Let's roll with the S&P.
All right. S&P. We are still grinding higher. We have daily cycles at the top. We are very overbought. The weekly chart is very interesting because I follow the concept of the rotation zone. The rotation zone, the upper end is the 8 EMA. Well, we are super stretched. Does not mean it has to end tomorrow, but we are super stretched from the weekly rotation zone. And when you get that stretched, there's generally a very quick snapback move. Have we triggered that move yet? No. The only minor thing we did was trigger a minor 4-hour wedge pattern, and now we continue to grind higher. What's interesting, I'm still watching for this. If we did get the bigger pullback with that wedge pattern, it's roughly at the same slope as the bottom of the rotation zone, which is the 21 EMA. And why do I look at the rotation zones? Because when you pull back in there, in the short term on the daily, I look for buy signals. That's why we're overextended from the daily one. And then if we pull back into the weekly, those generally are really good opportunities. You can see before the tariff tantrum, when we get those pullbacks into those weekly rotation zones, they can lead to some pretty nice moves back up. So at least in the short term, if we start breaking down right now, if we start breaking down again, my first key level support is about 6,200. If we pull back deeper into rotation zone, I'm looking closer to about 6,120. And if we zoom out, you can see the prior highs where we triple topped back with the last top being in February. We've now broken above this, and this is a continuous contract chart. We've broken above that, but even a pullback in the rotation zone on a daily basis just keeps us at the prior breakout level. If we pull back slightly bigger, then I'm going to be watching closer to the 60-78 area, 60-80 area for a potential more significant bottoming pattern. And you see down here, we are very, very overbought on the weekly basis. We can stay there for a while, but generally then you get a series of pullback weeks. Again, nothing's triggered yet, but I am in cautious mode for these pullbacks. If we continue higher, next target is next minor target is 6303. Next major target cluster is 6333 to 6342. And above that, if this just keeps plowing higher, and these levels are good even after a pullback. And the next level would be 6428 area. Again, these are areas that you're not trying to nail it exactly to the number.
Bobby?
No, I'm just reading about Alligator Alcatraz right now.
So
In terms of the S&P, we got the S&P future that is still short of the all-time high on a continuous contract, right?
right.
If you look at it, I think it's 20 basis points short.
Mhm.
But the SPY, obviously, if you're looking, the Spider S&P Trust is well above.
And the rolling contract that Mike was looking at is above too. So what do
and
we
the
look at?
cash, the cash is above.
Yeah.
Well, the only thing you don't have, and it's right there, the September contract.
It's 20 basis points below. No big deal.
Yes, but why I use the continuous is because if you just compare the continuous, and this is not back adjusted with rolls, this is just a continuous, so you have the gaps when you when you move to new contracts. But if you compare like the S&P, and I've done a lot of back testing with this, and then the cash, like your SPX, the charts are virtually the same. That's why the continuous mimics the cash a lot better than just going back and throwing out the prior contract. The only time I really just focus on the immediate contract is right after the roll day for a few days.
So what I guess what I was going to ask is, we are officially at as you call them, all new time highs.
Yes,
we're officially at all new time highs for the S&P for my friends that sold because Trump is crazy with his tariffs. I just want to point that out to everybody.
And we don't do that, by the way, with any sort of.
I'm not gloating.
Gotcha.
I told them not to do it.
Yeah, your emotions led you to the wrong conclusion, and your emotions can do that. Again, if I could tell one person, and by the way, I have not completely mastered my emotions in short and medium term trading. It is a really, really difficult thing to do. So I would just say work on it. Anywho, so Bob, can we go to the monthly, Mar chart, and like what do you think like for the next year kind of thing?
What do I think for the next year?
Mm-hmm.
What's interesting is we've been running out of momentum on the monthly chart, but again, you can continue to run out of momentum for a while. The major, I mean, you can even see here, and I follow things on a closing basis because you can dip through a rotation zone, but with the tariff tantrum, here's your monthly rotation zone.
Oh, wow.
Pulled back, dip below it, but look where it closed, right in the rotation zone. And then we technically got a %B buy pattern, which is a Bollinger-based short-term buy pattern. We actually got a monthly buy pattern in May when it closed above. First of all, it broke above, which is the trigger point, and then it has to fall through at the close. So we got to close above. So the trend is still up. What would change that on a bigger pullback level right now is if we closed below 53.73 on a monthly basis. That number is going to go higher as we make new highs. So roughly, if I was going to give it a level, just because we're probably going to be higher again in the next couple weeks at least, 5,400 would be key for if we manage to pull back down there and then close below that on a monthly level, then the trend would have definitely changed.
And that, again, that's a 13, 14, 15% pullback. So that's significant, obviously, right? But again, if you're a long-term investor, those are sometimes the things you must withstand.
Right. And I mean, it's got to do a lot of technical damage. We are running out. Again, we have a lot of potential topping patterns in place in the short term, but even if you pulled back into the weekly rotation zone again, you could pull back to 5,900 without doing massive technical damage to this to the bull move.
Makes sense. Anything else, Bob? Should we move along?
Can we go to the NASDAQ?
Sure.
NASDAQ here, I'll just start with the weekly again. Again, very overextended from the rotation zone. A great example in the NASDAQ was probably last May, June. What's interesting, May, June, and July, if you take a look at it in 24, how extended it got from the 8 EMA. And then we went, you had essentially 3 weeks down and then a significant bottoming bar that triggered a %B buy. So, not saying that has to happen again, but we are very extended. And one thing I'd also like to point out is we could, because we are extended from this 8 EMA, we could, if we spent 2-3 weeks consolidating up here, it doesn't have to be a pullback, allowing the moving average to catch up, then it essentially resets the rotation zone again. So there are two kinds of corrections: a sideways correction, and this would be an example. Where would be a good example of a sideways correction? Sort of like in here before the tariff tantrum. But see how we move sideways for a while and really let the rotation zone catch up to it? We could do something like that again without plummeting, or we could get the sharper pullback move. That's not decided yet, but we're going to get some kind of at least pause at some point. Again, we've already reconnected with the daily rotation zone on the NASDAQ. We pulled back one day, reconnected today. I'm taking this week's price action. We have decently insufficient volume. So because we have the July 4th holiday in 2 days, and we're grinding higher on lower volume. So I'm really going to be focused going into next week to see what happens, especially next Monday and Tuesday.
Mike, if you look at that period of time on the daily, if you go back in time a little bit, you'll see a sideways consolidation where your ISR went from overbought to oversold without the price moving much. I think that's kind of what you were talking about with, I think it might be somewhere around, I don't know if it's like December, like you see it right there.
Here is a great example. Before this sell-off, we went from,
you just touched into overbought there.
Right. We overbought to nearly oversold, back to overbought, and then it got the collapse. But this was the
price
great
didn't
example.
really go anywhere.
This price action from literally the middle of May till you started getting above it at the beginning of June was essentially a sideways correction. Yeah, you had some down little pullbacks, but it really didn't pull back a lot. It was overextended on the daily basis, and then it sort of just moved sideways and let the rotation zone catch up.
So that's an example of sideways of a sideways correction for people. So for Mike, right now, I have a little bit of sort of a pretty strong support right around 22,177, 178, somewhere in that level on the daily, right about there, right? Does that also show up on the weekly? And forgive me if you said it already, but does that also show up on the weekly?
There is, the key, let me move some of these lines around. There's a key, the breakout zone is back about 22,215. We have a major harmonic cluster about 22,105.
Okay.
And the rising rotation zone, so this will keep moving up, but the 50% harmonic from the last little run up is sitting at 21,831. The first area I'm watching for a pullback is around 22,400. We get through there, then I'll be if we drop through there, then I'll be looking 2130, 22,130 to 22,215 as the next potential buy area where I'll be looking for a daily or 4-hour buy setup. And if we fell through there, absolute major support is down at about 21,830.
And you'd be buying it there at the first time down? Well, you want to see a setup on the shorter term, right?
These are where I'm looking for setup. So this would be a weekly chart. So I'd shift down to the daily or the 4-hour chart and look for buy setups around those levels. Again, as we started the show, I just don't say, okay, if it is 21,831, I'm a buyer. No, because if there's no shorter time frame bounce pattern, I'm not going to buy it yet. But that's where I'll get more aggressive looking for the short-term bounce pattern.
Makes sense.
I really want to look at the Russell. I know it's sort of redundant, but with the Russell, I don't think it is. Because if you look at the Russell, I'm looking at the Russell as having finally done sort of a catch-up breakout, both on a daily and a weekly. Do you think I'm nuts on that, or do you agree with me?
Well, the Russell is interesting. Back, if you look at we had a sloppy inverse head and shoulders that was triggered a couple weeks ago. Now, personally, I'm not trading it that way. I have the targets on here because we're approaching a couple intermediate targets right now. The first one being we also had key resistance at the 200 SMA simple moving average. It took a few days of chipping away at it. We then closed above it, and on Monday of this week, we closed above the ever-important 62.5% harmonic, which shifts the probabilities higher, with the first target being, from a harmonic standpoint, 2285. My minor harmonic cluster, which we're going to hit today, was 2249, 2250. So the next key targets up on that, 2285. The first target from the inverse head and shoulders, which is also a minor significant level, is right around 2337. The next harmonic target is 2381, and the final head and shoulders target is 2441 area. This is also getting overextended. We are getting the cycle tops. So I'm more interested in watching now for any pullbacks to the daily rotation zone and possibly retest the 200 simple. And that level is right around 2190. The worst case scenario on a pullback would be about 2155 into the rotation zone. Okay. So those are the two levels I'll start watching for. Again, they may not happen until next week. We could just go sideways and consolidate, but on a pullback basis, those are the levels I'm looking for.
Yeah. So I wanted you to know too. Remember, I always joke about how I day trade every day, and I'm just at day trading. I mostly do it to keep my toes in the water. However, over the last couple of weeks, I've been really sticking to the rotation zone and the slope of it and whether or not it's expanding, and actually have been doing pretty well the last couple of weeks. And again, I'll always day trade because it makes me plugged into the market, and then I put on my 2 to 3 week swing trades once I get a feel for it, and that's where I usually make money. But I wanted to tell you I appreciate that, Michael. What should we look at now?
I'm going to throw in that the rotation zones are really fun for like day trading on shorter term charts. Just know that the reliability drops the lower you go in terms of, you can't
tell me that now. Last week I've been having good luck with them.
No, I'm just saying that's my experience.
The higher time frames are always more important.
Always.
Okay. Like, let's say we got to pull back. Let me jump back to the S&P. Let's say we got to pull back to the weekly rotation zone. That does not mean I have to wait for a weekly signal to do something there. That means, hey, I can take a shorter term trade based off a bigger drop in the weekly rotation zone. I'm just going to be waiting for some kind of setup to happen. I'm just not going to magically buy because it hits magic moving average.
Right. What I've been doing is it goes into the rotation zone, muddles around a little bit. When it comes out in the proper direction, that's where I've been establishing longs. And I usually have like a 8-day, 60-minute bar. And it has been working pretty well. But again, like I said, I never intend to make millions as an hour-to-hour trader. My trading is more swing with options. But anyway, yeah. What now?
Crude oil. I got a specific question about crude oil. All right. So something that I pointed out in, for those of you that don't know, Jimmy and I both do CME commentary. And something I pointed out in my crude oil commentary this week was that while the risk premium is theoretically priced out, and by that I mean
that big red bar.
Yeah, that big red bar. The risk premium that happens if there's an actual supply disruption. Everybody freaked out when there was no supply disruption. And I'll admit I didn't sell that either, but I didn't buy it. I didn't go long crude oil. But you notice the little consolidative pattern we're in now. It's higher than before the Israeli-Iran issue, for lack of a better word, the 10-day war, what they're calling it now.
Yeah.
Do you give any credence to that, Mike, or do you think it was just returning back to a sort of resistance turn support area and just kind of holding and respecting the previous breakout?
I was looking for this, and I was actually starting to either look for a continued breakdown play. It's been no man's land, or the breakout play. What's fascinated me is we're getting the breakout play. I think I went over it on my live stream over the last couple of days. I was watching for a break above about 66.60, which we've gotten, and that's in also with you have the Israel Hamas thing, and supposedly maybe another 60-day ceasefire has been negotiated, and crude's been moving up, holding above the prior massive resistance level, which was retested on the sell-off after the Iran thing died down. But now we're moving higher, and this is a little key breakout. In the short term, I'm watching for a retest of the 68.50 area. on
And
this
is
little breakout.
that the 200 or the 50 that's orange?
This is the 200.
200.
That's the 200.
So you think that's going to provide good overhead resistance, right? Because independent of that, I'd say I like the price movement of this last day, the consolidation pattern and the breakout. And I'd say this makes me a bit bullish. You say not bullish until it can clear the 200-day or what?
No, I'm saying it was a break above the 6660 level was the short-term level I was watching for the bullish breakout, which we've gotten. Now the first target for me is this 6850 area. It's not just because of simple 200. You see where the key, this emotional candle closed. That close was officially 6851. That's a very key magnet price right there because the emotional candle closed. So that's my short-term target. If we get through there, then my next targets, I'll give them to you right now. My next key target area is about 71.20. And then in order for me to be more sustained bullish, we'd have to close above 73. So if we did get to 71.20, between 71.20 and 73, I'd start being more aggressively raising a stop, watching for potential topping patterns. If we closed above 73, that would shift the probabilities based off the harmonics to higher for longer price action. But this is a very interesting break. Now, over the next couple of days, if we do pull back, I need it to hold this. I need it to hold this breakout level. If we fall back in, then it could turn into what could be a shake and bake and go the other way.
This is one of those things, guys. I'm sorry, Mike. This is one of those things that people like. They tend to make fun of technical analysts because what Mike just said to somebody who doesn't believe in technical analysts is if it doesn't continue higher, it's going to go lower, right? Which seems like theater of the obvious, but it's not. I look at the 200, Mike, and I say that that's rain clouds, and I'm not going out without an umbrella, even though the rain clouds don't necessarily mean it's going to rain on me, right? So I see that 200. I'm like, I'm sorry, but I need it to break above there. I'm not going to jump the gun there. I'd like to see it break above there, then retest and come back above. Is that too cautious?
It's just a different approach. I was looking for this breakout right here because I thought this was going to be a magnet area. We couldn't break lower on this sloppy double top that was triggered. We went through the first target and then based right there. And if I zoom out also, let me take off a couple things. If I'll show you right here, this bottom black line is actually right at the 62.5 harmonic. If I move that out of the way, where we retraced from the lows in May, beginning of May, to the spike highs with the Iran conflict. So just from a pure harmonic standpoint, out from a bullish where we could bounce is between the 50 and the 62.5 harmonic. And we pulled back. We did not close below that 62.5 harmonic. And now we're rotating back up. So that's why I was watching for the short-term breakout play, with this being at least a stop raise target. And then I can use the other harmonic targets higher for key profit taking and raising stops.
I like it. So
the fundamental.
It's fair to say that, Michael, you on the short term are +0.5 or +1 bullish up to the target you mentioned, correct?
I'm about +0.5.
Let's talk about that real quick. But before I lead you in that direction, I want to tell you that the fundamental thing for crude oil is supportive of Mike's slightly bullish tone, because a lot of the data coming out of China lately has been positive. Their manufacturing PMI beat expectations. Their Caixin manufacturing PMI moved back into expansion territory after having moved from expansion to contraction. Then it bounced back in, sort of like a breakout, a retest, and a breakout back up that we might see on a chart. And you've got some pretty poor ADP numbers. This is a live show, so we don't have to say you guys watching and we'll see the actual non-farm payrolls number. You will see them tomorrow. And I should bring up, before I go deeper into this, that the ADP numbers do not correlate to the non-farm payrolls number on a month-to-month basis. They correlate numerically over the last decade at about 96% clip. Now, what I mean by that is if you have ADP private payrolls moving lower over time, non-farm payrolls tend to move lower over time, but they don't correlate on a month-over-month basis. But I'm seeing the CME Fed Watch tool move rate hikes earlier and earlier, cuts, not increase the number of cuts, but they're moving them sooner and sooner and sooner on the probability scale. So people are starting to get excited that there might be rate cuts, that China might be coming back, crude oil demand. That's where that comes from.
Is that the same thing we're seeing in copper, platinum, palladium? Is that China related as well? Because that's kind of what
China related and rate cut related, which weaker dollar, better for commodities overall.
Good.
So that kind of sets up. Mike, real quick talk about that scale. Because on your newsletter, which Jim and I co-author for full disclosure, on your newsletter, unfilteredinvestor.com, you have underneath all your technical stuff, you have Jim's scale, -3, +3. Can you two guys talk about where that came from?
Well, yeah, because I like things honed into something that's tangible and touchable. So, there's obviously short-term, medium-term, long-term. And I like when Mike said +3 would be the most bullish on that time frame could be, -3 would be the most bearish. And I think it's a really, really relatable scale to people. Mike, anything to add to it?
No, I mean, that pretty much sums it up. And
okay, then let's take a quick time out. Is that okay? Luis, will you put the banner up? Remember, we're salesmen. Please do us a favor here. And
unfilteredinvestor.com?
No, Trady Harris. Trady Harris option. What is it called again? I thought you used to say on there. Trady Harris Option Pro. What's it called? I just spaced it out. But anyway, Trady Harris Option System, which is the best in the business. We've had veteran options traders, novice options traders, and everywhere in between say, "Oh yeah, we use that system. It's fantastic." You get 3 months free of Trady Harris Pro if you scan that QR code and do it. We would really appreciate if you give it a try. There is absolutely no obligation, but it is Trady Harris Pro. Get it free for 3 months. Please do us a solid and give it a go. Back to the show.
So real quick, I want to throw up. Go ahead, Mike, because you never finished that.
Yeah. I just wanted to say it's not just based off of in the short term. For example, I am, as came out in the last newsletter, on the S&P and NASDAQ, I'm actually -0.5 for bullishness. And you asked me about that before last week, Jim. Why am I -0.5 and we continue to go up? Because also the reward to risk here is not good for establishing new positions. So I'm not hyper bullish up here. That does not mean if we get that pullback, then it could jump to 1 or 2 easily once we get that pullback, because reward to risk also plays a major component in your, at least how I interpret your scale. I don't want to be like in gold. I'm still long-term very bullish, but there are times when, hey, it's not good. It's not a good reward to risk ratio. You don't have a good trade expectancy to really be establishing positions where it's at. So I'm going to be patient and wait till those key factors fall in my sort of flip over and come to me on a regular basis.
So real quick, Tim, your question, no, we haven't covered the dollar index yet. But I want to go to Remo's question. It's stock charts. If the BLS, if BLS weeks jobs pressure, I assume he means if it comes out with a weak job number, does that pressure a cut in July? Powell is under pressure. So I personally don't think they're going to cut in July unless it's a negative number. That would be the only thing that would get me to think that they would actually consider it. What do you guys think?
Usually I agree with Bobby on things like that. I do not agree with this. I think 60 is the number, in my opinion. If it is 60 or below, I think the market will start pricing in a July cut. I think there's a couple things to worry about. That ADP number was trash. There's no question. Trump has been screaming, so he has to feel some sort of pressure too. And by the way, we've said before, we respect that Jerome Powell has an edge to him and maybe was not cutting because Trump wanted him to, but now he can actually have the door open and say, well, the data is dictating it. So I think he might switch if it comes in under 60. Michael?
It would have to be a pretty big miss, I think, to move it to July. I really think it's still focused on September, but we'll find out tomorrow.
Well, you think a negative number moves it to July, of course, or not? Of course, I don't want to put words in your mouth.
A negative number,
yeah.
If it came in negative, yeah, it could move. That could tip it. That would be. I mean, what's it forecast to be for tomorrow?
110.
Yeah, I mean, if
Yeah.
we came in at negative 60, yeah. But if let's say we come in at 60K versus 100, is that enough to tip it to July? Probably not from a Powell standpoint. But again,
because that's my cutoff level. You heard it here. Remember, people. And I have no problem with being wrong. I'm wrong all the time. And I can take ridicule. I've been married for 33 years.
Special request on the text hotline, which just means it's somebody that I personally know that sent me a text. The AJG Insurance, Mike. AJG is the ticker. I think that's the ticker. I haven't looked at this ever.
My phone just rang and it was Scott Shelley. I almost had half of mine to answer and put him on speaker. Hadn't contributed to the show. I didn't. I already hung it up.
AJG, Arthur J. Gallagher and Company?
No, it's AJG Insurance. So let me come back with the ticker in a second, or Tim will probably put it in here as we're talking.
Arthur J. Gallagher is insurance. I cannot speak about them because I have family members who work there.
I've done that. Sure.
Arthur
there
J.
you go.
Gallagher.
That's what we want.
Yeah.
All right. Let me get you. Let me just put up. Let me just.
I am not commenting on Arthur J. Gallagher lawyers. Yes. I'm kind of
AJG is. Tim just put up AJG is correct. You just put that in there.
All right. Here we go. You have right now. Let me jump back to the daily. You've come back. You're testing a very, very key support level. We had a key reversal candle with a gap down open right there. Retested that level with the 200 simple, and now recently retested that with a potentially bullish candle. Now, again, can't give out trade recommendations, but based on
you can.
Well, I actually don't, because I don't.
I know you don't, but you
can say where you would buy it. You're a trader.
Well, here's if I was going to do this, which I don't have any, and I don't recall ever looking at AJG.
I never did.
Here would be my setup. Today we have a potential %B buy bar. We'd have to break above the high tomorrow. This would have to be tomorrow, because then it would be a potential entry. I'd be looking at an intraday entry. It'd have to follow through to the close above today's high. It is against the rotation zone, so it's a little more risk. That would be a front run potential for triggering this weekly double bottom, which would then need a follow through close above 327.34 to trigger. My stop would be just below these key two lows and the 200. So it would be just below 309.
So you don't have to worry about recommending it.
I would not want to own it if it closed below these two lows and back below the 200. And then I would look for a bigger move back down, or potentially, if that fails, go short. And my key levels for that, my first target area would be right around 304. And then on a close below 304, I'd be looking closer to 298. 295 to 298 is the next target area if this rolls over and closes below the 200.
Perfect.
So I'm going to throw a comment up by Widge real quick, Luis, if you could, and then I'm going to go back to Tim. Imagine Powell coming out and saying that the economy is so weak that he needs to cut rates. Think POTUS will be happy with that. So this is part of the reason I think we need to see a negative number, because I think Jerome Powell has that sort of spit and vinegar in him that we've talked about before. I think he's got to see the unemployment rate go somewhere around 4.8, 4.9, approaching 5, and he's got to see more than one 5-digit figure in the jobs number, because he's not going to want to give Trump what he wants. No, I truly believe he
it has to be like, I get what you're saying. It has to be undeniable. It has to be
undeniable, especially because in the last couple of comments, so many Fed members, including Powell, have said, well, we still got to worry about the tariff inflation, which Mike Singleton had a great point in one of his recent commentaries at Invictus Research. We don't make any money if you guys join Invictus Research, by the way. But he had a great commentary in there where he said, people say out of one side of their mouth that tariffs are taxes, which taxes are deflationary. Then on the other side of their mouth, they say tariffs are inflationary because they raise prices. Which one is it? Because they can't be both. He goes, we are of the belief that tariffs are taxes, because that's actually what they are. And taxes by their nature are deflationary.
'Cause
So
they take money out of the system. Yes, I agree.
yeah, I thought that was a great comment. So Tim, Mike, just to put your mind at ease, said I'm long AGJ, JG, my dyslexia is, and MMC. So do you want to look at MMC, Marsh & McLennan? So you don't have to worry about recommending anything. You're telling Timmy how bad his trades are. Well, they're not trades. Timmy doesn't trade. He's an
He owns
investor.
some boring shit, but boring shit makes money, Tim.
Yeah.
This one, let me just see.
That's the one.
Let me see. It's coming in. It's potentially coming into a very key support area. We're trading against the 87.5 harmonic. Right now, as long as it does not close back below 207, I'd be potentially looking for buy setups down here for bounce plays only. These would be bounce plays only because we have the declining weekly rotation zone. We have the hooking over 50 EMA. The only thing coming into, we have a pretty key support base. We are getting the oversold conditions. That's why for a short-term thing, I'd be looking for bounce plays. And then on a weekly basis, I'd be targeting, let me see here.
Do we have a sloppy head and shoulders reversal there, Mike?
Is this? No, it's
Okay.
way too. No, the key thing.
That left shoulder's not formed at all.
No, it's not formed correctly. Now, the key thing on a pullback, if it breaks below 206, would not be looking for anything bullish. Let's see where the harmonics fall. Look at that. Look at that. Let me change my color.
200 there.
Look at the 200
and the lows
the
from back.
magic
Funny how it all works out, right?
Yeah.
So if we start breaking down below the key low from middle of January, I'd be pretty patient. The highest level I'd start looking for buy setups would be around 199. The lowest level would be 187. And right there, that brings it into the 200 into play. And you just have a pretty good key support levels right around there. And if you look right around here, so you have right around the harmonics lines up with some pretty key other levels. So again, if you don't get a bounce play or the bounce play is very short-lived and then close back below 207, I'd be hands off until you get in this window between 187 and 199.
Makes sense.
Tim, do you want him to look at that VNM? Just answer in the chat.
Independent of that, I would like to look at gold, and I'd like to look at one of the high flyer names that aren't high flying well anymore, like either Google or Amazon or Apple.
Well, here's gold. We can do while you're waiting for that other response. Here's gold. Gold, couple week pullback, weekly rotation zone. Yesterday, gold triggered a %B buy pattern, also closing above a key descending trend line. So again, this was longer term. This is where using time frames pulling back into the weekly rotation zone, which last time it pulled back there, you see with follow time, we got the rotation up, which lasted for 1, 2, 3, 4 weeks. And then we got finally a pullback bar. So now pulled back in the weekly rotation zone again. And we've got a triggered daily buy pattern. This is where we talked about earlier, where we pull back to key areas. I start going down in the time frames and look for potential entry setups. And as I've talked about, where do we pull back to? We pulled back between the 50 and the 62.5 harmonic. You can apply these things to all different kinds of markets, and it's the same virtual setups as this testing was done across a myriad of markets, futures, stocks, FX. So that's where I was looking for a buy setup. We got the potential bar on Monday. We triggered it on Tuesday. We followed through with the close, and now we're just trying to push higher. On my next key levels on gold in the short term, tell you right now, we're getting through this. I got to keep shifting colors back and forth so we can see them. But we're getting through this 33.63, 50% harmonic. The next key thing I need to see for the close above is 33.91. So that's my next target area. That also corresponds to just in pure price action, a really key breakdown area, which I just highlighted in black. So that's my short-term targets. We close above 33.91. I'm long-term bullish, but this just gets me back into, hey, we could easily rotate back up. And if this does go to new highs before you have me on again in something, my key targets, if we get above 35.09, is 35.58 and 36.06 to the upside.
Bobby, what do you got? We're running against the clock a little bit. We got about another 10 minutes.
Well, let's give Timmy his other ones.
Sure.
The only one putting stocks in here is COF.
So by the way, for you other guys listening too, we will if it makes sense, we'll look at what you want. So
we're happy to ask Mike to do it.
What is this name?
COF, Capital One Financial.
Yeah, it's just the S&P or the NASDAQ. It's 100% correlated, right?
I mean, right there, would I be, this ties into the same thing with the, with what I just said with the S&P. Would I be chasing this higher at this point? No. Would I be watching? Again, look at this. You got the key breakout area. We just hit a minor harmonic level today. So we got any pullback into the daily rotation zone, I'd be looking for buy setups. If you're long-term, again, I'd just be trailing, and the next harmonic target's 227.50 area. But other than that, as long as this really didn't start closing back below 190 at this point, I wouldn't sweat any longer-term trades. In the short term, if you were a short-term swing trader, this is not really a day trade thing, but a short-term swing trader, anywhere between my preferential area would be around 210 to 210.50. My worst case area would be this other minor breakout area you see right here with the bottom of the rising rotation zone, probably about 205. So anywhere between 210.50 and 205 would be looking for buy setups for me for rotations back up.
Love it. What do you got? We got time for maybe one, maybe two more. Is Apple okay, or is Apple dead money now?
No, Apple's been moving the last couple of days.
And everybody's long Apple too. You know, I mean, no matter what, this actually, that looks promising the last couple days.
Apple needs, the only thing I'm looking at Apple, we are at cycle tops and very overbought. If it can base up here, right around these highs right here.
So get above it and then base up there, right?
Or if it bases just below and then we get out of very overbought conditions without really dropping back. I wouldn't want to see it drop back below about 204.50. But if it can hold up here, then break this key area, or break the key area to your point above 213.30 and then retest it and hold that retest. My key target would be the 37.5 prior harmonic, the 200, my first, and this key resistance shelf. That would be, I'm not super bullish in Apple from the long term, but just on a pure technical play, that could be a really nice potential bullish play to the upside. The only thing against it right now is it's super overbought. So I need it. That's where I hate breakouts when something's already overbought, because that's where you lead to a lot of false breakouts. Right. That's why I'm saying I'd rather have it base here, get out of this overbought condition, then break out.
Bobby, I have a quick question for you.
Yeah.
So the Magnificent Seven led the rally for years. The Magnificent Seven is no more. It's the Magnificent Three. It's NVIDIA, Microsoft, and Meta. Google, Amazon, Tesla, Apple, they're all kind of foundering. I never know what the word is. They're disproportionately not doing well at all. But the advanced decline line in the NASDAQ hit its all-time highs in May, meaning the rally's broadening out a little bit. Do you think that gives a shot in the arm to the rally?
To the overall rally?
Yeah.
Yeah, I do. I mean, I love seeing the advanced decline line go positive. I think all of this really does depend on tomorrow's number. Sure. And then we obviously have the July 9th thing that we talked about a little bit already. So, I mean, the advanced decline line, yeah, I like to see it broadening out, but we've seen long index rallies with the advanced decline line not at its optimal levels.
Right.
So there's just this whole thing about, like, you know, valuations and momentum outperforms, period. It also outrisks, but it outperforms. So when you see the advanced decline line coming in, if momentum might slow down, but the overall market's probably better off terms of the risk profile of it.
What do we got time for? One more thing. What do we get?
Tim is first of all, Tim is asking if Jimmy's going to New Orleans this year.
I am, yeah.
And then Luis, put up Tim's last stock request, because what I bet he means CRWV, but he put up CRVW. And I think he means CoreWeave, because he said just for fun. And again, I know him personally. I don't think that he means CareView Communications, which is at 18 cents.
No,
so I'm pretty sure he means CoreWeave. And he's been having a lot of fun with CoreWeave lately, not trading it, but disparaging people who are trading it.
So let's look at CoreWeave, CRWV.
CoreWeave, I mean, went vertical. Now
shocking.
We could be getting the start of the vertical down. There's not, again, these are harder to do because.
Wait a second, CoreWeave just IPO'd in April. Is that what that chart is telling me?
Yeah.
Okay, so I'm out. Thanks.
Yeah. And you know, it's they don't make money. So
yeah, we just want to throw
material. We've seen rallies where people don't make money for. We saw Amazon not make money for 15 years. Anyway.
No, but there's a lot of companies. People say you always cite Amazon. Okay, there's a lot of companies that didn't make any money and
their stock
making money did not keep them around.
I want to throw out Tim's line. Tim's line is that they sell dollars for 50 cents. That's Tim's line about CoreWeave.
From a pure technical perspective, I'm watching, because I have looked at this before because it just went insane. I'm watching at least. I'll be shocked if it does not get back to 110 over the next few weeks. Now we'll get bounces in, because it's still, people are trading this like I don't know,
like a meme stock.
You know, but my key area, since we don't even have the bottom of the rotation zone, minor level is 130, majors 110. Would I be aggressively going? I mean, if you're trying to aggressively trade this, we're sitting at the bottom of the rotation zone. But if you start losing this 145 area, watch out.
That's where
I would not want to be long it.
Right. Got it. Call it a day.
We're done.
We are done. Thank you guys so much for joining us. This is my favorite show to do because I love the interaction from you guys. And we really appreciate greatly the DMs, all the retweets. Thank you. This is Tradiers, The Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. That's Mike Arnold of Unfiltered Investor newsletter, where his technical analysis is literally the best in the business. If you have some time to really get into what he is saying, because I think it's actually, it was like a light bulb went off after like a month of reading his stuff, like, oh, now I get it. And it's helped me quite a bit. Thank you guys very much. This has been The Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.